Hello and welcome to TechnoTrends. Today we will be talking about how to make more money investing in the stock market. Now, before we get started, don't forget to smash that like button and subscribe to my channel. It really helps out the YouTube algorithm. Now back to the video. This is something that many new and even experienced investors forget to do. It's called utilizing trends to enhance your investment returns. Now, if you're doubting me and saying, well, Josh, this strategy is dumb and everybody uses it, well, you're wrong. Lots of people jump to index funds, which is sort of like blind sword fighting, and you don't know what you're investing in. Well, actually, I take that back. When you invest in an index fund, you do know what you're investing in, but you're investing in so many things that statistically, you'll pick up a bunch of losing stocks, but you'll also pick up a bunch of winning stocks. Now, what if I said you could cut out some of the losers? Like, who in their right living mind would want to invest in oil right now? But oil is in all of the index funds. With the right amount of research, time, and training, it's definitely possible to create your own investment portfolio that can outperform an index fund. Also, if you're saying, well, Josh,
if you're talking about trends, isn't an index fund based off of the trend that statistically the economy is constantly growing each year?
Well, if that's the type of trend you want to exploit, that's really like the weakest trend you can exploit. There's so many stronger trends you can exploit. Plus, the most valuable company in the world was created when the CEO decided to use a trend to his advantage. Amazon.com. The CEO of Amazon.com saw a staggering statistic. Internet usage was growing at a rate of 2,000% per year. He elaborates on this idea so well that I will let Jeff Bezos explain this to you, all the way back in 1997.
Where did you get an idea for Amazon.com?
Well, 3 years ago, I was in New York City working for a quantitative hedge fund when I came across the startling statistic that web usage was growing at 2,300% a year. So I decided I would try and find a business plan that made sense in the context of that growth. And I picked books as the first best product to sell online. And books were great as the first best because books are incredibly unusual in one respect, and that is that there are more items in the book category than there are items in any other category by far. In the book space, there are more than 3 million different books worldwide. When you have that many items, you can literally build a store online that couldn't exist any other way.
So as you can see, Jeff Bezos, CEO of Amazon, picked up the trend that internet was growing at a rate of 2,000% per year. What is important with that number is that, let's just say, 5 users organically discovered Amazon.com in 1995. The next year, for each of those 5 users, statistically, 2,000 more users would find it. So the next year, Amazon.com might have 10,000 users just from 5, which is a pretty striking number. With some simple advertising and some other things, it would be super easy to get traction on such a baby technology like the World Wide Web. You can see how well that method works now. Amazon's a $1 trillion company, which is pretty crazy. Although there might not be trends like the 2,000% per year growth rate of the internet, there are still big trends that are happening today, such as electric vehicles. The amount of users of electric vehicles is growing by 60% per year, and over time that statistically will increase. As battery technology gets better and car batteries get cheaper, at some point there will be no reason to use gasoline because electric cars will be better. The same goes with solar panels. Solar power energy is growing. Demand is growing at a rate of 20% per year. Another way you could look at trends is if you know that people are stuck at home, statistically, people are going to be forced to use their computers. So when people are using their computers, where's all the processing power coming from? Data centers. Even today, data centers are forced to grow. With the advent of 5G technology and self-driving cars, more and more devices are going to be forced to communicate with each other. Data centers will capitalize on this trend because every new electric vehicle means that communicates with each other would mean that there would need to be another data center to support it. And every new Netflix user and every new movie uploaded to Netflix needs to be stored on a data center. It's also possible to use these same exact type of trends to see where you shouldn't invest. Amazon.com is literally pushing many stores out of business. Remember Sears? Remember H.H. Gray? All of those stores are losing business to Amazon, that tech giant. And the other huge department stores like Macy's are struggling. So why would you invest in those? Well, this all sounds great, but is it too good to be true? If you look at the dot-com bubble, you're saying, well, Josh,
Aren't bubbles caused when people look at trends too much? Like the dot-com bubble, with the growth rate of the internet being 2,000% per year, didn't that cause a huge bubble?
well, in short, yeah, the dot-com bubble was caused by speculation, but I want you to listen to the CEO of Amazon, Jeff Bezos. He actually predicted the dot-com bubble a few months before it happened, maybe even a year. The interview with him is pretty crazy. I'm going to show you a clip of it now.
Long term, I believe that it's very easy to predict that there are going to be lots of successful companies born of the internet. They're going to have very large market caps and so on. I also believe that today, where we sit, it's very hard to predict who those companies are going to be. So, you can make bets on these things.
But you're not a pure internet play.
It doesn't matter to me whether we're a pure internet play. What matters to me is do we provide the best customer service. Internet, schminternet, that doesn't matter.
Well, but it does matter to your investors to know whether they're investing in a company that
No, they should be investing in a company that obsesses over customer experience. In the long term, there is never any misalignment between customer interests and shareholder interests.
Well, that's the same argument that somebody at Walmart would make as well, wouldn't they?
I don't see why not. I think they should make that argument.
So
It's a correct argument.
Now, if you listen closely, you heard something more remarkable. Jeff Bezos just outlined the final part of my investment strategy, and that is finding the most high-quality company that will benefit from the trend. In other words, compounding one trend with another. Mind-blowing. Now, it's really easy to identify a whole bunch of compounding trends when people are stuck at home. I'm going to make a hypothetical scenario for how a trend could compound, because it's great to look at it. In this scenario, internet usage is growing at 1% per year, and data center usage is growing at 10% per year. So, you have something to look at. All of a sudden, a bunch of volcanoes erupt all around the world, and the air quality is so bad that almost no one can go outside. People are stuck inside their houses, and the only things to do inside of a house are go on your computer, use the internet, play games. So what companies are going to benefit? Data centers, video game companies. People would be forced to play video games. People would also be forced to use their computers for school and stuff. And to support all that new traffic, data centers are forced to double in size. After the air quality gets better, some people might realize, hey, you know what? I can do a lot more things from home than I used to, so the growth rate is accelerated, and the adoption of technology happens even faster. Or maybe you find a survey online saying that people would be more willing to buy solar panels if they were cheaper. You see that one company is deciding to make a giant factory for solar panels, and it's going to cut the cost astronomically, giving them a huge advantage. You can make a ballpark estimate that solar panel growth for that specific year with the price cut will be higher than the previous years, because more people are willing to buy solar panels because they're cheaper, on top of the natural growth rate of 50% per year. In other words, you have to find trends that will make one company benefit exponentially. Now, looking back, if you're asking, have I used this? And yes, I have. In 2016, when I looked at Apple stock, I knew for a fact that iPhone sales were down that year. There were a whole bunch of people saying that Apple is not innovating anymore. Their iPhone only had one new feature that year, so it made sense that a lot of people wouldn't buy it. Who would want a new phone because it just had Force Touch? Why not wait for another model year to go around? Or buy the previous model year? There's a whole bunch of websites that have leaks of future Apple products, so I was able to figure out what the next iPhone would be before it was actually released. And by looking at the model, I knew that it was going to be a major redesign, so I could accurately predict that iPhone sales the next year would grow a lot. When the iPhone was released, the website pinned it to a T. Now, if you're wondering what website it is, I'll put the website in the description. The same website also had the leaks for the iPhone 2 years out, and that was even crazier. It had the leaks of the iPhone 10, which was the 10th anniversary iPhone, so apparently Apple was supposed to go all out on it. It was supposed to be a giant slab of screen, and I knew that with such a radical redesign, a bunch of people would buy the phone. 2 back-to-back redesigns. Apple had never done this. Also, with Apple rolling out a whole bunch of new products, that was already growing revenue too. Plus, Apple stock was down $29-ish from its high. So I was able to purchase shares of Apple stock at around $99. And not only was Apple able to sell more iPhones, they were also able to sell them at a higher price. And this in turn increased their profits and pushed the stock price higher. In conclusion, when you're looking at stocks, you should figure out what trends will benefit the company. Great companies and great business models like Sears and Macy's won't always stand up to the future. And you have to figure out what trends are going to change that. Thanks for watching. I hope you learned something. Comment down below in the comment section and tell me what trend you think is going to change the world. And what company do you think is going to benefit from it? I'd love to see your opinions. Maybe I'll make a video on it. Thanks for watching. Don't forget to like the video and subscribe. Peace.